Hey everyone, welcome to another episode of Wallet Wisdom, a podcast presented by Lake Michigan Credit Union. If you're new to the podcast or have listened for a while now, Wallet Wisdom is a podcast designed around breaking down the ins and outs of financial aspects, as we also help bring answers to some of banking's more confusing and complex questions. I'm one of your hosts, Brett. Sharing the mic with me today, we have the multi-talented and very funny Lo co-hosting with me. Hello.
Why, hello there.
How are you?
I'm doing well. How are you?
It's beautiful outside.
We got sunshine, man. Can't complain.
I love it. I love it. And also running the board with me, of course, we've got the one, the only producer, Matt. How's it going, Matt?
I'm doing awesome. How are you?
Dude, I'm excited for this episode. It's going to be a good episode.
It's going to be great.
It's going to be great. Well, you keep making those sound good, and we'll keep going here. So today's show is going to be another great episode. Like I said, we are going to be diving into the topic of mortgage refinancing and whether that's kind of a right decision for you guys as listeners. So joining us today is the very knowledgeable and extremely fun Kelli DeWitt. So welcome to the show.
Thank you, Brett.
Absolutely. We are so glad that you can bring some of that joy that you always have into this podcast and for listeners to get to know you a little bit better as well. So
thank you. I appreciate you asking.
Absolutely. So I always love to take a little bit of time at the beginning just to get to know you a little bit and for listeners to also get to know you. So tell us a little bit about your story here at LMCU and kind of what you do for the credit union.
Well, I support the Southwest Michigan sales team, so the loan officers down in Southwest Michigan. And I've been with the credit union just over 9 years.
Oh, that's
but
awesome.
I've been in the industry a really long time.
A really long time. That's awesome. So I would say you definitely have seen a thing or two when it comes to mortgages in the industry.
Yeah.
Man.
Yeah. When I started, interest rates were just coming down off 18%.
Oh my
word.
Yeah.
Wow.
Yeah.
Wow. I can't even imagine.
Yeah.
And because it's changed so dramatically since. Mm-hmm. We're going to get into that a little more, but yeah, that's incredible. Mm-hmm. So now 9 years doing quick math, not great. So were you joining into the credit union right around like the 2008 housing crisis?
Coming off that.
Coming right off of that.
Coming off that as a loan officer at that time.
Sure.
And then I think it was 3 years ago, I was asked if I would be interested in actually supporting the sales team. And I took the opportunity.
That's so
and
cool.
I love it.
Oh, and see, that makes sense. Having gotten to know you for, as many years now, your personality fits that you would be someone that loves to support people and really be that person to champion them and help them, succeed in their career. So that makes a lot of sense.
Thank you.
Absolutely. So we're going to kind of transition into what we're talking about today, which again is really kind of breaking down for listeners whether or not refinancing, I think we're hearing a lot about that right now. Some listeners are probably wondering, like, why are we all now hearing more about refinancing and mortgage and all this stuff? And, I've heard things about interest rates are at all-time lows and how that affects it. So really kind of figuring out, is refinancing going to be the right fit, or is it right for me? And is this the right time to really consider doing that? So, can you kind of help break it down just a little bit about understanding kind of the little bit of the differences of like what that refinancing really means to somebody? Maybe I've got a mortgage. What does that mean when I hear someone say, do you want to refinance your loan? So,
well, first of all, when you hear, hey, refinance, it really means paying off the current underlying debt that you have with a brand new debt.
Okay.
So does it make sense to eliminate the current loan you have? And typically it makes sense if your interest rate is lower, or maybe your circumstances have changed and you might need to tap into maybe some equity. It's called a cash out refinance. We'll talk about that later.
Yeah.
Or maybe you are looking and saying, you know what, we took out the loan for a 30-year term and we really are wanting to pay off our loan quicker. We don't anticipate moving in the near future. So let's look at refinancing. Or maybe when you got your current mortgage, you took out an adjustable rate mortgage.
Oh, sure.
And you want to move it into a fixed rate. So like I said, every situation's unique.
Yeah.
Yeah.
And again, to help if there are some listeners that are still new to the financial world or even might be looking at even buying a house for their first time, that difference between like that that adjustable rate mortgage and the fixed mortgage, really just a breakdown real quick of like what the differences, I guess, are. What do those two mean, I guess?
Well, let's say that you wanted the lowest possible rate when you acquired your home, just the absolute lowest rate.
Sure.
You probably took out maybe what is called a 5-1 ARM. Maybe it was only fixed for 5 years, and after the 5th year, it turned into an adjustable rate mortgage.
Okay.
But darn it, you got a lower rate than what the 30-year fixed rate was at that time.
Sure,
Because
sure.
a lot of people shop payment. They don't necessarily shop program or rate. So the payment met more at that time. Well, now that the interest rates, the fixed rates have come down, it's a great time for some of these people to look at the opportunity of getting away from the adjustable rate mortgage.
Sure. So like that mortgage rate in like a fixed rate would be something set for the entirety of the loan. Is that right?
Yes.
And so
yes.
then I'm assuming the ARM or adjustable rate mortgage, that could fluctuate after a certain point.
Exactly.
Okay.
Exactly.
Yeah, that makes sense.
Yeah.
Nice. And so I guess that really makes sense if you're in something more like that. Or if I was, let's say, in a fixed mortgage right now, what would maybe make me think to move into thinking about a refinance? What other options exist there?
Well, in the old way of explaining it, because I'm old,
No, you're
we
not.
used to tell people, listen, if you can get an interest rate 1% or more lower than what your current rate is,
Sure.
it's probably beneficial to look at refinancing. And the reason for that 1% spread is because when you refinance, you pay closing costs again.
Okay.
And when you pay those closing costs, that's either money out of your pocket or you're going to roll it into the loan amount. So you have to justify, am I saving enough money per month
Sure.
to offset the expense? And an accountant or somebody in the financial world would say, if you could recoup that money that it's costing you to refinance in under 3 years, it makes sense to do so.
Yeah.
But that's assuming you're going to live in the home more than 3 years.
Sure,
So
sure.
that's another factor that goes into wanting to contemplate, is a refinance worth it for me or not? How long do you plan on living in the house you're in?
Sure. That's a really good point.
Kind of in that same vein, is there a time period where it's too soon to refinance after purchasing a home?
great question.
People will ask, well, I've only had the home 6 or 7 years. I don't think it's worth refinancing.
No, it's the true, what we call the break-even point. Does it make sense? That's a good question.
Very
Yeah.
good.
Yeah.
Yeah, because I could imagine if it's like, I just got my mortgage last year, right? In fact, a great example for listeners is even me. Like we just bought our house about 3 years. It'll be 4 years in August. And, for me, I'll be honest, I thought, why would I really want to get a refinance? It was only 4 years ago. Is it really that much of a difference? But the current rate that I have in my mortgage loan, it is, more than a point or, a percent or more than what is being offered now. And it's, for me, I guess, and maybe you can help me in my own situation, is 1% really that big of a difference? Because like 1% seems like it can't really be that much.
Well, I'm glad you asked.
Ah.
So like 1% on a $100,000 loan.
Sure.
Let's just simplify it. And let's just assume it's a 30-year fixed rate mortgage. So a $100,000 loan, it's probably a $58 savings per month.
Okay.
Between current market rate and 1% more.
Sure.
A $300,000 loan is going to be $173 per month savings between
The
current
two.
market rate and 1% higher.
Wow.
So you now have to take that math. Okay, if I'm saving, let's say $58 per month, but I have to pay closing costs of $2,300.
Sure.
And that's just an average.
Yeah,
Every loan amount has a different different
Closing
set of
costs.
fees, right? Then you have to figure out, is that worthwhile? Well, really, you're over 3 years to recoup that.
Sure.
So that's where you still have to do the math to make sure it makes sense.
Sure. Absolutely. But, if I like, for example, our house, we're really planning to stay in it for the long haul. We love the neighborhood and it's in our school district and our kids are still, in school. So I guess for me, I would love to be able to be saving, 170 or more,
Sure.
depending on what your loan is and the rate that you can get. Cause that's extra in my pocket every month, So I don't know about you guys listening, but I sure could use a little extra in my pocket as well. And that's just based off 1%.
Right.
So I guess it does make a little bit more of an impact.
One thing too that Lake Michigan Credit Union will do, you bought that house, 4 years ago?
Yeah.
So you don't have to go back to a 30-year term. You could, we'll amortize it for you for 26 years. So you're not going backwards. Or we could offer you a shorter term at maybe even a lower rate. So again, it's all about what you want out of it. Are you trying to save money per month, or are you just trying to cut back on the interest that you're paying over the length of the loan?
Sure.
So
that's true.
We have to know each individual circumstance.
Well, and I can imagine too, if that's based off of monthly savings, the year or like if I was, like I said, planning on staying my whole life in that house and the whole term, that's probably quite a bit of money in the long term, like going 30 years, let's say, that you could be saving. And man, that might be like a new car or a new addition. I've been wanting a new kitchen. If listeners have been listening long enough to the podcast, they'll have heard enough episodes where I talk about wanting to remodel my kitchen. But hey, there you go.
And I love that. And you definitely touched on what I think LMCU does so well, and that's being creative and innovative with how we offer our products. And so you definitely hit the nail on the head when you said you don't have to refinance right into that same term. What kind of flexibility do you have to cater? Because it's not a one size fits all, right?
Right. So when you're asking about the flexibility to cater, typical mortgage is 15 year, 20, 25, 30. And when you're doing a refinance to something in between, the loan officer just needs to know so that they can accommodate.
Yeah.
Or a lot of the loan officers, we have great loan officers, they'll just make the suggestion as well.
Sure. And honestly, until you just mentioned, just some of that, I didn't know that you could say, I would like my payment to be 28 years versus like 30. I just kind of always assumed that was just the standard and you can't really, but that's really cool that there are options for listeners that are like, hey, it just makes sense that maybe to help tie some things in, we can't do 15, but we could maybe do 18, and that still fits into our budget. And so there's some options there for people. Just as we keep asking some other questions for you, for listeners to know, like, if they're wondering, like, where can I learn more about this kind of stuff? Or where can I, who could I talk to see what's an option for me? Where's a good place to point them, I guess? I mean, obviously we'd love them at LMCU, but I mean, who's maybe a first step to start having a conversation with?
I always say, start with the current lender that you're making the house payment to. See what they have available. See what they're offering.
Sure.
Doesn't mean you have to stick with them. You always want to get a second opinion.
Yeah.
You would be shocked at how many people do not question closing costs or discount points.
Sure.
Discount points typically are not advised by the loan officer on a refinance if someone isn't going to keep their house a long time.
Okay.
But some lenders automatically put discount points in to try to get the rate bought down even lower. And the break-even point then is not going to usually be 36 months or 3 years.
Sure.
It's probably going to be longer.
Wow.
Yes.
Well, I like what you said earlier too, is and I think for me at least, buying my first home, it was the emotion of my first home and everything is so brand new and, it's all coming very quickly and I got all this paperwork and all these things that you don't fully process the important things that sometimes can just kind of fly past your, over your head. And when you had mentioned how sometimes we get into thinking, I just want the lowest rate. Mm-hmm. It may not always be the best option because you might get that, like say in an ARM, but if you're not planning on staying there for the fixed period of time, you're going to find yourself that rate might inflate quite a bit and fluctuate quite a bit, that you're actually losing money on the deal that way. And so it's sometimes really important to say, what's going to be the best long term? Even if I'm saying, like, for me, my first home, we were there for like 9 years. Oh. So for us, it was like knowing at least that, hey, we're going to be here for, 7 to 10 years. What's going to be best for us in that duration of time, And so I think that's really important to hit back on for listeners to remember. It's like, while maybe you are going to be buying your first home right now, or you're thinking about refinancing, it's so important to keep the emotion and the excitement, but also don't let that blind you maybe from seeing what might be the best option long term or in the right way. Yeah. So I guess let me shift gears just a little bit. And I think for a lot of listeners, it's like, what are some of those questions that maybe they should start asking themselves, right? Like, okay, I've heard about free financing. Kelly's been talking about some pretty cool things, and it sounds like there's some savings, but what are some questions that listeners might want to still look at their situation and say, do I want to refinance for, like you mentioned, cost savings on my monthly? Do I want to reduce because I plan on staying here still and I want to, find a way to reduce the yearly? What are some questions, I guess, listeners should ask themselves?
Well, first is, how long do we plan on staying in this house?
Sure.
How long are we going to stay there? What's our goal? Is our goal to get our payment dropped? Or maybe is the goal to do a cash out refinance because we want to put in that new kitchen in our house, but we want to take advantage of the low interest rate and the equity that we have built up in our home. And in equity, just so you know, is the difference between what the appraiser says the home is worth and what you owe on the loan.
Okay.
Unless you're a veteran, the lender's not going to loan you 100% of your home's equity. They want to make sure you have your loan to value is 80% or lower if they're going to give you equity out of your home.
Sure.
So that's number one. And then the other thing you have to think about, I just had this conversation with a member actually last week. We've got to figure out, what does that appraiser think your home is worth? Because what you think it's worth is not what maybe the appraiser thinks it's worth based off what they're required to report to us.
We tend to put value on our memories we made on, right? That's where my daughter walked. And,
Yeah. I put new, cabinets up, and maybe that's a different story, but I put those up.
That's $50,000 right
at least.
I saved money. I did it myself.
DIY. That's funny.
So the appraiser's value, and then what my conversation was, okay, then what condition is the home in? Well, the upstairs was gutted.
Oh, okay.
So I was explaining, when an appraiser goes out to your home, they can't really give value to a gutted upstairs. And we probably need the value of that square footage to give it the value that you're placing on it. So what you should be looking at is, okay, what will an appraiser say when they come out here?
Right.
The other thing you should question is, should I go to a shorter term? Is it important to me to pay it off faster?
Sure.
Which might mean a higher monthly payment than what I'm used to, but darn it, I might own it a lot quicker.
Yeah.
Some questions that you'd ask is, when I bought the house, I put 5% down and I'm paying private mortgage insurance. So maybe I should look at, has my value gone up enough to where I can get rid of private mortgage insurance by refinancing? And that works on a conventional loan.
Sure.
Some people purchase their home with FHA financing, and FHA has mortgage insurance premium that stays there pretty much for the life of the loan. There's nuances to that, but if you refinance away from an FHA loan to a conventional loan, you might have 20% equity now, and you get away from the FHA. You wouldn't have the FHA mortgage insurance premium, and you end up with a conventional loan.
And I can attest to that, seeing that my loan is an FHA loan, and I do have that PMI. And if that was no longer in the equation, I mean, that's a pretty significant cost savings just in how much monthly it can be for just even that component, let alone just the regular interest rate. So that again is a really great point. Like you might save off of your interest percentage, but if you're doing something where you're also getting rid of, like, say, PMI, you might find yourself in your situation saving even more.
Right.
And I think it's also important just to note too, for listeners, this is all, a lot of this is just real rough numbers. Everyone, like Lo, you said, everyone's in a different situation. Everyone might have a different mortgage rate. Everyone's opportunity to get a certain refinance rate may vary. So, one important thing is if you're looking for information about that, what some rates are, you can always check out our website, lmcu.org, and you can find some of those current rates that are out there. Also, always recommended. I mean, we love to help people, whether you're a member or you're not. If you stop into a branch and, just talk to one of our tellers or, MSRs or branch managers, they will easily get you in touch with like a loan officer that can answer some of these basic questions for you. And again, there's no obligation, that's what I love about us, is that we really care about people and we want to help them and find the best results for them. Yeah. So, if you're interested in those types of things, do check us out. You can also reach out on our website through just a contact form there too. So, so I guess we're kind of coming to a close with some of the information we were, hoping to hear, because it's been really helpful. Because for me, even I'm thinking I might need to look into actually calling.
I know a great place you can call.
Oh, yeah?
Yeah. There's this really cool lady named Kelly that can totally direct you to somebody.
I've heard of this Kelly.
She's awesome.
Yeah. So, is there anything else that you feel like would be still really crucial for maybe some of our listeners to really ask? Yeah.
Yeah, I do. For instance, our website, which is, we reference it all the time, that's referring to a single family owner occupied mortgage.
Yeah.
But there's still people out there that maybe own a vacation or a second home.
Oh, yeah.
And, maybe they want to know, should we look into refinancing that? There's people that have investment properties that maybe, they could benefit. But those rates on anytime you get away from that single family home, the interest rates will be different because the risk is different on those products. So manufactured homes are looked at a little bit differently. Condominiums, duplexes, 3-4 unit, second home cottages. So definitely get in touch with an experienced loan officer that can guide you through what that rate would be for those collateral types.
Well, and you hit on a really interesting point with that. That also is a great kind of example of what LMCU can offer. We can offer a whole array of different styles and types of loans and mortgage loans, from single family to rental properties to all these different things. We have these means right here in our credit union, and we have experts that can assist in that.
After working in the branches, I can really attest to, you don't have to know anything before you start talking to one of our loan officers. In fact, I hate the term officer. It makes it sound like you're going to boss us around, like read the law to us. I really kind of think of you guys as counselors. You come alongside and you're like, this is your situation. Let's look at what your options are. And I've always loved that when I would send members from the teller line over to one of our loan officers, that I knew they were going to come back with being served or have an idea of what their next steps
game
are.
plan,
so,
right?
Yeah. I love that about LMCU.
I like that. Loan counselor. Feels so...
mortgage loan counselor, an MLC instead of an MLO. I like that a lot.
That's right. It's like a warm hug.
I heard loan Sherpa once. They're guiding you like a Sherpa.
That's spiritual leader.
That's right. That's right.
I love it.
I love it. That's awesome. Yeah. I think that's great. Well, Kelly, I think there is so much more that we can always dive into. And I think as we wrap up, it's also great for, just listeners to note too, you probably have been hearing a lot about how interest rates are at kind of historic lows. And, it's important to note that those don't always stay. There is a flux. There is a bit of that up and down, ebb and flow there. But while rates are low, this might just be that moment where it's the right time.
Right.
But again, getting in touch with someone, whether it's at LMCU or like you mentioned, if you currently got a loan through a different, company, check with them. There's a lot of opportunity to really help get people to some extra financial stages. And I'm looking really forward to hopefully listeners getting in touch and taking advantage of that. So thank you
You're
so
welcome.
much.
Thanks for having me.
Yes.
So fun to have you.
Well, that about wraps up the end of this part, but
Do you feel that? The air just changed in here.
the backs of my hair are on edge.
I love it.
I think it's time for the Wiser Than the Show trivia. And we are really excited because Wiser Than the Show trivia is sponsored by LMCU's very own Community Relations Department. And up for grabs today, Kelly, you are going to be going up against me and have an opportunity to win $50 to go to one of our nonprofits that LMCU supports in our communities. And I'm just going to say, I'm not good at trivia, so you have a really good chance.
I don't know. Which of you is feeling wise today? Because we're going to find out.
That's
all right?
exactly right.
All right, and I get to ask the questions this
Absolutely.
week, and I'm pretty excited. I've kind of chosen a theme of questions, and it's all around entertainment.
Thank God
Entertainment.
it's not sports.
So, Lo, I guess my question is, you get a choice. You can either do this in the voice of the wonderful Regis Philbin of Who Wants to Be a Millionaire?
I can't do it anywhere near that.
Or you can be Jane Lynch from the new Weakest Link.
Oh, is she weakest link
She's
now?
Weakest Link. You're the Weakest Link.
You are the weakest link.
Goodbye.
Goodbye.
That's okay. No, you can use your own voice.
I was given a somewhat decent voice. So
I think so. The low voice is good.
Low voice. You
What-
doing like,
I see what you did there.
Yeah.
Yeah.
yeah. Oh, my name is Lo. Got it. Okay. All right. So we're gonna dive in. So it's best 2 out of 3. All right, is what we're aiming for here.
Yeah.
Shut them down, Kelly. Just
I'll
shut them
try.
down.
I'll
All
try.
right.
That's
we
right.
want to see that money go into somewhere good.
Indeed. And we'll have to buzz in with our voice.
Okay.
Yes.
And my name, right?
The voice, yeah.
Loud noise works
Wow.
fine.
Yeah.
Whatever sound effect you want to do.
I got
Ready?
my popcorn over here.
Just Matt's over
Buckle
here.
up, folks. Buckle up.
That's
It's on.
right.
So our first question
All
of
right.
the day.
Here we go.
How many keys are on a classic piano? Standard classic piano.
First one.
Talking
to say
all the keys.
Brett, I'm torn because I know it's in the 80s.
Is
and
it?
Is it? I am going to say 84 keys.
Kelly, would you like to steal?
I would. And for some reason, I'm thinking 86.
You guys missed it.
81?
By that much. It's 88.
88.
Oh,
you were
88.
closer.
Yes. If we were doing closer without going over,
That's
it would
right.
have been Kelly.
It
but-
would have. But
Oh.
neither of us.
So someone's got to take it with these next 2 questions, or we're going to have to keep on going.
We'll have to go into tiebreaker, sudden death.
I hope not.
All right, I'm going to try to go a little bit easier here for you guys.
Okay.
What city do the Beatles come from?
Kelly.
Uh,
London.
So you're heading in the right direction, the right regional area.
It's one of those names that are English.
Worcestershire.
Worcestershire sauce.
Oh no.
We're stumping. There's no one wise in this crew.
Liverpool.
Oh,
Is that it?
that's right.
I kept thinking Penny Lane.
I knew it was
but
a
Penny
L.
Lane is near
Is
there.
within there, right.
Liverpool. Woo!
All right, you guys.
All right.
Whew, that was a tough one to get a good answer out of you two.
Kelly, you got to get this one.
All right,
To tie
I'm
it
trying.
up and go into
I'm
sudden
trying.
death. You've got
I
this.
think we've got this.
I'm rooting for you. So,
How about this one? I hope you guys are Seinfeld fans. Seinfeld? Yeah? Maybe?
No.
What is Kramer's first name on Seinfeld?
No clue.
No clue?
I just know him as Kramer. We're
I
on
did
that
too.
kind of level of friendship.
Right.
It's just Kramer to me.
Right.
I don't know.
His name is Cosmo Kramer.
Cosmo. Yeah, now I know.
Yes.
Okay, we're gonna.
Would you have taken Pennypacker? You know, that's his. I knew that. I knew that. You know.
No, that's not his name from his parents. So his parents wouldn't appreciate that very much. All right, you guys, let's try to go even easier because that's where we're at today. All right.
Ask me a mortgage question.
Right.
Sir Finance is on there somewhere.
Right. What does pity mean? What is the name of the coffee shop in the sitcom Friends?
The one Phoebe works at?
That almost seems like we could accept. No.
Where she's saying smelly cat?
Yeah. That's where they hung out a lot.
Hint, LMCU used to have a coffee shop with part of this name in the title.
Oh, no.
If you're around for the coffee shop days, the perk.
Starbucks.
The Central Perk.
Oh. All right.
We are stricken with these questions, Matt.
Oh, no.
I just have to say I did not pick the
I'm
questions.
like,
I thought you were going to take credit for it.
No, I'm going to throw that under. Yeah.
I'm like, Matt's just waiting over here like, I know I picked these ones, but
No, we're going to do this one. What day is Star Wars Day?
Kelly, I'm so sorry.
I am not a trivia girl.
That's okay. This is my love language of Star Wars. So Brett, May 4th.
May the 4th.
May the
May the
4th
4th be with you.
It's my dear friend's birthday. Huge Star Wars
Yeah.
fan. It's a good day. But that's okay, Kelly, because that's now going to go into a pool.
I'm
so
so
our
glad.
next guest
Yes.
will have a chance to play for, what, 100?
100. And so,
So good.
you know, really, you're still a winner because you are still part of giving that $50
They get
to
an
another.
even bigger gift.
That's right.
I banked it.
You banked
That's
it.
right. Oh man. Well, Kelly, it was a blast having you on, and we'll work on finding those right balance of trivia. So next time we have you on, we'll get like mortgage finance questions, and I will clearly lose, and you will win.
I'll have to call Kelly just for some trivia. It'll be good.
Exactly. So
thank you.
excellent. Well, again, thank you so much for being on the show. Thank you to Lo for being on the show, co-hosting. Awesome job. And Matt, thank you as well for just being you and producing and making us sound good. So
Thank you
I
so
appreciate
much,
that.
Brett. That means a lot.
I'm glad. I'm glad. Just again, listeners, be sure to subscribe, like us. We are on pretty much every social network you can imagine. We've got between LinkedIn, Twitter, Instagram, Facebook. We're on Spotify, and we are also on Apple Music. So, be sure, like us, subscribe. I swear, we're really nice people.
We are.
We are. Also, if you got any questions or comments that you want answered on the show, please feel free to reach out to our social channels and let us know. And we'll be seeing you on the next show. Take care.
Thanks for listening. The information provided in this podcast by Lake Michigan Credit Union is general education or marketing in nature and is not intended to be accounting, legal, tax, investment, financial, or other advice. Statements of individuals are their own, not LMCU's. All topics discussed are information of a general nature and do not address the circumstances of any particular individual or entity. Consult an appropriate professional concerning your specific situation. As of the date of publishing and any future date this podcast is broadcast, all rates, fees, payments, or other specific figures discussed are subject to change and are dependent upon your specific financial situation. All loan products discussed are subject to credit and collateral approval. You alone assume the sole responsibility of evaluating the merits and risks associated with the use of any information or other content in the podcast before making any decisions based on such information or other content. In exchange for listening to the podcast, you agree not to hold LMCU, its affiliates, or any third-party service providers liable for any possible claim for damages arising from any decision you make based on information or other content made available to you through the podcast. For more information on any of the content discussed in this podcast, please visit lmcu.org. Copyright Lake Michigan Credit Union, federally insured by NCUA. Equal housing lender. LMCU, NMLS ID number 442967.